Good afternoon, everyone. Thank you for joining our webinar today on the EnergizeCT Health and Safety Revolving Loan Fund. Before we get started and I introduce our presenters, I just want to do a little bit of housekeeping. So if you have questions today, please feel free to share them during. We'll answer them at the end. But if something comes up as we go through, just open the little orange panel that you can see on the side of your GoToWebinar box and type in the question. We will be recording the session, so we can share the recording and the slides after the fact. They'll be posted on our website and sent to you all via email. So without any further ado, let me present our speakers for the day. We have Kim Stevenson, the Director of Multifamily Housing Programs here at the Connecticut Green Bank, and John D'Agostino, the Associate Director for Inclusive Prosperity Capital. Thank you both for presenting. I'll turn it over to Kim.
Rudy, thank you. And thanks everyone for joining today. We're going to be talking about our Energize Connecticut Health and Safety Loan Fund. This loan fund has been designed to address health and safety issues in multifamily properties. The Green Bank is very grateful to the Department of Energy and Environmental Protection for providing this resource. We have $1.5 million in capital to capitalize this loan fund. We are making loans available up to $300,000 to address health and safety needs. And the terms of these loans, they're low interest loans, 2.99% for up to 20 years. And I wanted to just kind of get that out in the front so that you understand the products that we're talking about here. What we're going to do in the webinar this morning is talk about what exactly this loan fund can fund, why you should consider using this loan fund. We're going to provide some case study examples, and then I'm going to hand this over to John D'Agostino, who's going to walk you all through more detailed loan terms and the application process, and then we'll leave a little bit of time at the end for questions and answers if folks have them. So why is this resource needed? Why is it important? Here in Connecticut, we have an older and aging housing stock where many of the residential units, over 70%, were built before 1979. Many of these properties, as you folks all know who are in the housing world, need capital improvements, and this includes addressing health and safety issues. In addition, Connecticut has amongst the highest energy costs and highest energy burdens in the country, and our low-income residents are the hardest hit. We also know that energy improvements good energy improvements, smart energy improvements, can significantly reduce energy and other operating costs for both owners and residents. However, oftentimes there are health and safety issues that need to be identified and addressed before these energy improvements can be made. So this loan fund is really designed to get at those health and safety issues so that we can open a path to allow the energy improvements to happen that will in turn create a better living environment for residents, they'll reduce costs, and they'll save energy. And I'm going to demonstrate how we're doing this at the Green Bank in a couple of the case studies shortly. So one other point that we'd like to make before we get into the details is that we're often seeing property owners, property managers hold off on doing health and safety improvements to properties, oftentimes waiting for grants or very low-cost funding to come along. Sometimes that funding comes along, but very often it doesn't. It won't materialize. And if you're not making the health and safety improvements, you're not doing the energy improvements, you may be hurting yourself financially in the long run because you're not taking immediate advantage of energy and maintenance and cost savings that you could benefit from if these improvements are made. And then also this loan fund to help remediate health and safety issues is a potential resource for property owners that might be dealing with building code violations and support them in building properties up to code. The caveat would be that you would also need to look at the energy performance of your building and work to improve energy performance, which is likely ultimately going to result in cost savings for you, your tenants, and an improved building. So what can the Energize Connecticut Health and Safety Loan Fund provide funding for? We can provide funding for measures that address and remediate mold, sources of mold, asbestos, lead paint, and other hazards. And this is particularly important when you're making energy improvements, if you're doing weatherization or insulation, because you can't seal a property if you've got air quality issues from mold or asbestos, pests in the building. So these funds can help to remove and eliminate all of these issues. They can help with amelioration or replacement of leaking pipes, failed roofs, leaking roofs that cause mold and water issues, defective combustion equipment, carbon monoxide sources, radon gas, knob and tube wiring, and other electrical hazards. And they can also be used to fund the costs of relevant health and safety audits and assessments necessary for professional services. So all of these items are listed here, and we will be sharing copies of the presentation so that you will have all of this information. So next, we've talked about the fact that the health and safety issues that are remediated and addressed need to open a path to allow other energy upgrades to be implemented. So what are those related energy measures that are eligible or we're looking to have addressed in combination with the health and safety loan funds? So those include any energy efficiency measures that are incented by the electric or gas utility companies and receive rebates. So that would include weatherization, insulation, high efficiency heating, ventilation, and air conditioning equipment, water heaters, anything that's eligible under Green Bank, other Green Bank financing products. So one example here would be if you're looking to install solar, you've got a roof that has leaks or other structural and health and safety issues, this funding could be used for that. Anything related to fuel conversions and associated improvements, energy storage, electric vehicle charging stations, or other energy upgrades with a commercial track record of realized savings and approved by the Green Bank. So the message that I'd like you to take away here is very broad set of energy improvements and generally a very broad set of associated health and safety improvements are eligible. The loan fund specifically funds the health and safety improvements, but the Green Bank has other products to help fund the energy improvements, or there are many other sources outside the Green Bank to fund these. So we look at this as a package. Okay, so now let me move on now and share a couple of case studies with you. These are multifamily properties in Connecticut that have taken advantage of the Health and Safety Loan Fund, as well as other Green Bank financing products. I'm going to start with the Success Village Co-op in Bridgeport, Connecticut. For those of you in the Fairfield County region of the state, I suspect that you're familiar with this property. It's 1,000 units of co-op housing that was built during around World War II. It was worker housing. It has a central heating plant that's providing heat to a campus of units. The piping is got holes in it. It's covered with asbestos. And this property, in fact, has the highest energy usage intensity of any multifamily property that we in the Green Bank have looked at, with annual heating costs getting close to $2 million a year. So really significant opportunity here for this property to move over to other ways of heating the units, high efficiency equipment, and save money, improve the value of these properties, and improve the health and safety conditions of the units. So the Green Bank has provided Success Village with a $165,000 health and safety loan to remove asbestos. This is in a pilot section of the property. This will be done in phases. We're starting first with a smaller piece of the property. And this has been combined with some technical assistance from the Green Bank, as well as a pre-development loan that we provided for engineering analysis, design, and development. Ultimately, all this work is leading the way towards implementation of these energy improvements in the entire campus. So this is one example of a property that's taking advantage of the health and safety loan, and that when these energy improvements are ultimately implemented, there will be significant energy and maintenance cost savings to this property. Let me move on to our second example. Our second example is the Seabury Co-op in New Haven, Connecticut. This is 88 units of housing that's affordable to low and moderate income residents. It's adjacent to the Yale campus, and because of that location, it's an extremely valuable property that provides that's a very important affordable housing resource for this community. It's in a location where there's jobs, there's transportation, but because of very high energy costs, significant capital needs, high maintenance costs, this property is both physically and financially distressed, with a threat of going into bankruptcy. And what we've been doing is we've been working with this property to really help them address these issues and get them stabilized and maintain this property as an important affordable housing resource for New Haven. So our support has included a health and safety loan. This health and safety loan has been used for REAC repairs. These are repairs that need to be done in order to bring this property up to code, to pass HUD inspections, and necessary in order to receive funding to do the energy improvements and ultimately the other capital improvements in this property. And then we've also provided pre-development loans, like with Success Village, to support this property in doing all the design and engineering work. Green Bank funding has been combined with other funding from the Urban Homesteading Assistance Board, which supports co-ops here in Connecticut and other parts of the country. So in total, they're receiving approximately $1 million in pre-development funding, which includes our health and safety loan. Not all deals are as complex as Seabury and Success Village. We've had other properties that have received smaller loans on the order of $15,000 to $20,000 for much simpler projects. And then finally, what I wanted to do is walk you really quickly through an example of showing how by unlocking cash flows from energy savings, these can really help to stabilize the properties. And this is an example where energy improvements have been made. We've had several years of performance data looking at the results of the energy improvements and observing the savings and the cash flow. So this example here is East Meadow Condo in Manchester, Connecticut. The Green Bank funded lighting, boilers, roof replacement, and insulation. In the case of East Meadow, the roofs were leaking. There were lots of mold issues. So that was the health and safety issue that was addressed with this property. The total project costs were $650,000. The property received $34,000 in utility incentives. And the Green Bank and our partner in financing this project, Capital for Change, funded the project to the tune of $620,000. You can see that there was annual debt service of $53,000, but estimated annual savings of $79,000, leaving an estimated free cash flow of $26,000 a year going back to this property. This is a property that was also in physical and financial distress. It turned out that the energy maintenance, and in this case insurance cost savings, were even higher than we estimated, higher than this $26,000 of free cash flow, and the property has been able to refund between $250 and $500 a year to the low-income residents of this property, many of whom are elderly residents on fixed incomes. So again, this is an example of health and safety improvements with energy improvements that's able to support capital improvements in the property and realize savings, increase the value of the property, and improve the living environment of the residents. So with that, those case studies and those examples, I'd like to turn this over to my colleague, John D'Agostino, who will walk through the details of this program, how to use it, and how to apply for the funds.
Great, thanks, Kim. So before I just jump in, I just want to clarify for those of you who are confused at the onset of the presentation about, and you may have asked yourself, what is Inclusive Prosperity Capital and how does that relate to this program offering? About a year ago, the Green Bank spun out a nonprofit capital fund that is basically just a leaner and meaner mechanism of facilitating, various programs across the Green Bank. So Inclusive Prosperity Capital is the actual administrator for the EnergizeCT Health and Safety Revolving Loan Fund. So don't be scared. We're a cousin of the Green Bank. We're still in the same offices, sitting next to one another. So we're working in coordination with one another as we implement this program. So at a high level, eligible properties for the EnergizeCT Health and Safety Revolving Loan Fund. Our definition of multifamily is 5+ units. Those are residential units. We've gotten inquiries in the past from folks who have, commercial property on the first floor and 3 residential units above, and that wouldn't be qualifying. So we're looking for a minimum of 5 residential units or greater with no ceiling as designated multifamily. It has to serve low and moderate income residents. The definition, which is included in a few more slides, is 60% of the units have to be 80% of area median income or below. That can be either designated units or qualified based on the income of residents that reside in those units. Ownership structure, we can fund privately owned properties, nonprofit, housing authorities, co-ops, condos, multifamily property type, apartments, campus-style complexes, senior and congregate housing, mixed-use residential properties. So all multifamily property types. As Kim mentioned earlier, there's $1.5 million that's available on a rolling basis for eligible applicants. To date, we have funded 3 loans out of this fund. That $1.5 million is not significantly dented, so we're using that as a placeholder figure. Kim also mentioned earlier loan terms, so this is generalized. So there's a floor at $10,000, a current ceiling at $300,000. We can potentially fund projects that are greater than $300,000. In general, we haven't seen requests to that level. So clearly, above that level, we would want to make sure that the financials and the opportunity for the project is very robust. The loan term, we can do loans up to 20 years. We're trying to provide flexibility to the market, recognizing that health and safety is frequently, work that is taken care of via grants. And so trying to push the loan term out in order to make it an affordable option is certainly our intent, in as much as a property's financials can support a shorter term. That is in our interest, and so that's going to be a little bit of a dynamic back and forth. So we don't want to presume a 20-year term just because it's the longest term available. Faster repayment is helpful for us in order to make the funds available for other borrowers. The loan amortization, it's interest only during a construction period, which our default is going to be a 6-month remediation period, maybe shorter, maybe longer. It'll be project dependent, and then fixed for the remaining life of the loan. We do have flexibility here as listed, but that's going to be our go-to-market approach. And we're standardizing the interest rate at 2.99% per year. In past iterations of this loan product, we've gone out and tried to add as much flexibility as possible with the rate, and we just found that it was confusing. So hopefully the 2.99 is attractive enough for folks to want to initiate projects that would otherwise languish waiting years for grant funding. And then no prepayment penalty as well. Security, so for smaller loans, less than $50,000, these will typically be unsecured. We're trying to operationalize the funds in as rapid fire fashion as we can for projects that are relatively low risk from a capital perspective. Loans greater than $50,000, we will seek security. What that security is a little bit subject to the project and also what security is available. But in as much as the health and safety remediation is kind of, there are not energy savings directly related to the health and safety work. We just want to be confident in the repayment, for that work in order to engender subsequent energy savings opportunities. Loan fees, 0.5% of the funding amount, which we can roll into the loan amount, and so that'll be part of the amortization schedule. Audit requirement and energy monitoring. So the audit requirement is we want to make sure that the health and safety loan has to be related to eventual energy improvements, whether those energy improvements are being performed in conjunction with the health and safety remediation or subject to health and safety remediation. So this loan product is not just for pure health and safety. We want to make sure that there are energy improvements that are seeking to be made. So to that effect, we want to make sure that there is an energy audit that is performed to the satisfaction of the Green Bank, as part of the evaluation of the health and safety work as well as the energy-related measures. That audit would need to be conducted by either a professionally licensed engineer or an energy professional with BPI Energy Auditor certification or qualification, or BPI Healthy Home Assessor qualification. So typically the threshold there is we're looking for, in other parlance, an ASHRAE level 2 energy audit, but it'll depend a little bit on the type of audit that's being furnished. Energy monitoring. Energy monitoring is required for the life of the loan term or 2 years, whichever is greater. We want to make sure that the energy improvements that are eventually implemented, we understand how the building is performing as a baseline prior to the implementation of those energy measures, but also how the building is performing subsequent to those energy improvements to make sure that those the energy savings are being realized from the project. So applications, I'm actually going to go in reverse order here. So as mentioned, the health and safety measures have to precede or be installed in conjunction with the energy improvements. So this is not a standalone product for just health and safety alone. The applications, so how the energy savings, the energy improvement work is implemented is less of our concern. So if that's something that would like to be funded out of reserves or through a private loan or through using Green Bank financing, all of the above. So the health and safety application can come in conjunction with application for such financing, or with the acknowledgement that the work is going to be funded out of reserves. We're flexible either way. We mentioned the project eligibility previously. At least 60% of the units have to serve low-income residents defined as 80% of area median income or less, either by unit designation or by income of residents that reside within those units. And we've already spoken about the structures. In as much as the funding for this program is being provided by the State Department of Energy and Environmental Protection, the funding does have state set-aside requirements for small contractors, minority business enterprises. It's also subject to the Green Bank air filtration policy for multifamily properties, whereby projects that are located within 500 yards of highway, diesel rail lines, or railway switching lines where there are issues with asthma and other health-related conditions, we make sure that there are certain filtration levels, filtration quality thresholds that are installed along with the energy improvements for the projects. And then just standard, making sure that all permits are obtained from requisite authorities and that there's quality control and inspections on all projects that are performed. Underwriting, so there's a complete application that's available on our website. We're making sure that you're compliant with all the program guidelines that we've spoken to so far. And then the ability to repay the proposed loan, fundamentally, we're making sure that that the borrower has the ability to repay the loan at whatever term is being sought. We're making sure that the debt service coverage ratio on these properties, either as presently provided or based on the energy improvements, based on the expectation of the property performance subsequent to the energy improvements that is engendered by the health and safety loan, is greater than 1.1 typically. We will look for exceptions from 1.0 to 1.1. We're making sure that all taxes and mortgage payments are current. We're making sure that the current ratio is greater than 1. So it's a standard financial underwrite, making sure that the loan, that the debt can be serviced over the life of the term. And then the application process, you can visit the Green Bank's website here, ctgreenbank.com/health and safety. The application and the financial spreadsheet, both of which need to be furnished in order to have a completed application, can be supplied. We're happy to try to assist you in filling out that application. Please don't hesitate just because it looks a little intimidating. The goal is for it not to be intimidating, but we just want to make sure we're collecting as much information up front as possible so that we can process it in a timely manner as possible. Once we have a complete application, there's a back and forth with our underwriting partners. We try to have that underwriting turned around, within a week or two, but if there are questions, it might take a little extra time. But we will form a loan committee once there is a completed underwriting package for a proposed health and safety loan project, and we try and have it closed and funded in about a month's time. I think in the past it's taken a month and a half, but we try to move these fairly quickly as a low intensity underwrite. And that wrapped up fairly quickly. So I don't know, is there anything else that we want to flag that would be helpful? We flagged the various types of health and safety related measures that we've seen out there in buildings, in multifamily properties in Connecticut. Some of the types of properties that we've done, the high level loan terms, the application process. I'm aware there's a lot of projects that are out there that we've been made aware of in the past who are applied for various types of grant funding. Those applications often, take time and or languish, or they, require multiple applications. So the hope with this loan product is to put something in the market that allows folks to get moving on a project in a timely fashion, because, the health and safety elements are there and need to be remediated. And so if this is a mechanism to facilitate those improvements and then the subsequent energy improvements that enhance the properties, health and safety, tenant retention, comfort, et cetera, we think it's a real benefit to the market.
And John, I would also add here that if you have questions about whether or not your property might be eligible, or this is an appropriate resource, or health and safety plus energy funding is an appropriate resource, come to us and we're happy to, have a call with you, explore the property, talk about your situation, and figure out what might be the best resources or approach to do that. And we here at the Green Bank are really as much about lending out money to you all as we are really wanting to make sure that the housing stock, the property owners in Connecticut are getting the resources they need to finance and make these energy improvements. And in some cases that might be the Green Bank. In other cases there might be other sources of funding that are more favorable. But we will, more than happy to help you brainstorm on all of that and figure out paths to advance your properties and your projects. And I guess with that, why don't we open this up to questions if there are any? So we'll just wait a minute here for folks to think about questions and send them to us.
We'll wait for folks to finish digesting their lunch and then send us questions.
So it's not looking like we're getting any questions. Hopefully we've answered all of your questions. And again, oh, hold on, we do have a question. Okay, so we have a question about will the overall loan fund be able to be increased? Health and safety housing issues in Connecticut are huge. So let me answer that by saying We're really viewing this $1.5 million that we have from DEEP as a pilot. We hope to really learn from all the lending that we're doing here. The Green Bank also has a separate initiative that we're working on with a national organization called the Green and Healthy Homes Initiative, along with the Department of Public Health, the Department of Energy and Environmental Protection, the Department of Housing, other agencies, to determine if there is a way to use health insurance money to actually fund health and safety remediation in housing, releasing those dollars because, and what we're doing is we're working to build a case study that shows if you address the health and safety issues at their root, if you have a house that doesn't have air quality issues, then the kids won't have asthma and there won't be hundreds of thousands of dollars of medical care costs down the line. That is in a phase where we're still building out the business case, and that will be followed by an implementation pilot. If folks have interest in that project, reach out to us and we'll put you on the mailing list for that. So the next question is, will there be efforts to track health improvements among occupants of these buildings? Right now, we are not doing that with these loan funds. We're simply trying to get the dollars out the door and support property owners in making the improvements. That said, as we advance with this Green and Healthy Homes initiative that I've talked about, it's actually a performance-based program. So health improvements among occupants will absolutely be tracked with that program. So it's in the future vision, but we're taking first steps first. So I think I'll wait another minute to see if there's any other questions that come. Okay, yeah, so the question here is, this is someone who's looking at a 55-year-old standalone condominium. Are they eligible for the 2.9 interest for only solar, or is that only for the health and safety related improvements? So I'm glad you asked that question. The 2.99% is specifically for the health and safety related improvements, not the energy improvements. So we'll give folks another 15 or 20 seconds, see if there's any other questions that you can think of. All right, Rudy, John, I think that's it. And thank you all for joining us for lunch today. I hope this information has been helpful. And we here, the Green Bank multifamily team, we're here to support you all with your work in improving multifamily properties here in Connecticut. So come to us with your questions, your projects. Happy to work with you. Thank you for joining.